Hi traders, you're welcome to my video on the spread matrix trading. Okay, we are just going to be looking at an advanced yet essential tool that can help you execute smarter trades, and that is the spread matrix trading technique. All right, if you've ever experienced unexpected slippage, poor trade execution, or struggled to understand liquidity, then this is the video for you. All right. The spread matrix helps you analyze bid ask spreads across multiple currency pairs, okay, and time frames, allowing you to trade more efficiently and avoid unnecessary trading costs. Now, before we dive in, make sure to hit that like button and subscribe for more expert trading insights. Now, let us get started. Spread matrix trading is all about understanding the bid ask spread across different currency pairs and market conditions. All right. It is necessary to, have that understanding. The bid ask spread is the difference between the highest price buyers are willing to pay, which is the bid, and the lowest price sellers are asking, which is the ask. All right. So this spread fluctuates based on market liquidity, volatility, and institutional trading activity. By using a spread matrix, you can compare spreads across multiple currency pairs in real time, identify periods of high liquidity, which are tight spreads, and low liquidity, which are wider spreads. All right. And you can also adjust your trading strategy to avoid costly trade execution errors. Now, understanding the spread matrix is key to optimizing your entry and exit points while reducing slippage. Now, many traders focus only on price action, ignoring the spread, which can lead to costly mistakes. All right, because paying attention to spread is also very important. All right, the difference between the ask price and the bid price is very important. Okay, here's why spread is so important, because tight spreads equal to better execution. Tight spread equals better execution. When the spread is tight, it means the market is highly liquid. Orders get filled more efficiently, making it ideal for trading. Major forex pairs like Euro USD and USD JPY usually have the tightest spreads. Now let's look at this. Is the Euro USD chart. I have zoomed in already very closely, and you can see that this is the spread, right? The difference between the ask price and the bid price. Now this is USD JPY. Let me go to the 1 minute chart. Go to the 1 minute chart and let me zoom in. Real. Let me zoom in. Okay, you can see the spread for USD JPY. Now let us look at another currency pair that is not a major currency pair. Let's look at CAD CHF. You're going to see the difference. So can you see that the spread is wider here compared to Euro USD? Can you see? Can you see Euro USD? Okay, this is Euro USD. This is CAD CHF. Can you see that CAD CHF is wider compared to Euro USD? And also, wider spreads equal higher trading costs, because when liquidity is low, spreads widen. This often happens during news events or in the late hours of the trading day. So wider spreads mean you pay more to enter a trade, which can eat into your capital over time. Spread fluctuations can signal market conditions. Spreads tend to widen during major economic announcements. If you see a sudden spike in spreads, it might indicate increased volatility ahead. Traders who rely on scalping or short-term strategies need to watch spreads closely to avoid unnecessary losses. The spread matrix helps you keep track of these fluctuations in real time, giving you an edge in trade execution. Now, let us talk about how to actually use the spread matrix in your trading routine. So, first of all, you have to set up a spread matrix. All right. uh you might not find it in every platform, okay, but when you find the spread matrix, you know, you can just take advantage of it, okay. But several platforms offer a spread monitoring tool, or you can use external tools to track spreads across multiple pairs, okay. Just focus on the pairs you trade most often and monitor their spreads throughout different market sessions. All right. Now look for times when spreads are tightest. Okay. These are usually the best periods for trade execution. They're usually the best periods for trade execution. All right. Avoid trading during low liquidity hours, such as the early Asian session or late US session, unless you are specifically targeting that volatility. All right. And then also uh ensure that you adjust your strategy based on spread condition. All right. Adjust your strategy based on spread condition. If spreads are wide, consider waiting for you know, better conditions instead of entering immediately. For scalpers and day traders, tracking spread behavior can actually help determine the best times to trade and avoid excessive costs. All right. Also, watch for spread expansion during news events. Okay. High impact news can cause spreads to widen. Right. High impact news can actually cause spreads to widen dramatically, leading to unexpected losses. If you see spreads widening rapidly on your matrix, consider holding off on entering trades until the market stabilizes. So by incorporating the spread matrix into your trading routine, you can improve execution, reduce unnecessary costs, and make smarter decisions based on real-time market conditions. Now, to wrap things up, let's just go over the key takeaways from this video, okay? Spread matrix trading helps you analyze bid-ask spreads in real time, okay? Tighter spreads lead to better execution, while wider spreads increase trading costs. Monitoring spreads helps identify high liquidity and low liquidity periods. Also, using the spread matrix can improve trade timing and reduce unnecessary expenses. So if you are not already using a spread matrix, now is the time to start. Okay? Thank you for watching. That is it for this video. If you found this breakdown on spread matrix trading helpful, make sure to hit that like button and subscribe for more trading insights. Drop a comment below and let me know, have you used the spread matrix before and how has it helped your trading? Thank you for watching and I'll see you in the next video. Happy trading.